everyone, welcome to today's webinar. So we have an exciting topic to present. It's one of the better benefits of filing US expat taxes, and it's about the child tax credits for US parents that are living abroad. So my name is Natalie Goldstein. I am from California, based in Vienna, Austria. My background's in information technology and finance, and like you, I'm also a parent. So, I welcomed my first child in 2020, and since then I've been benefiting from the refundable child tax credits, which if you don't know much about, you will learn a lot about as we go through this webinar. If you already know a little bit about them, then you already know that, like I said, there are benefits to filing a US tax return. Besides that, long story short, as an American abroad, filing taxes from the US or for the US, not even from the US because you're not in the US, but for the US from abroad is not the easiest process. And it definitely doesn't help when the tax firms out there charge you 10 times what they would normally charge a taxpayer in the US. And the US tax softwares that claim that they can do your tax returns for you don't even know the difference between Australia and Austria. So there's that. Also not fun when you go into these US-based tax softwares and they ask you 5 times if you live abroad. They then want you to input a US address, a US phone number, and use a US credit card. So again, in our journey, we have found that filing expat taxes has been very unfriendly. And that's why we created MyExpatTaxes. We're the leading US tax software for expats. So no matter where you live, whether it's in Canada, whether it's in Australia, no matter where, any corner of the globe, if you have to file US taxes, look no further than myexpattaxes.com. Alrighty, let's jump into what we'll talk about today. So there's a lot to know about the child tax credits. I'll try to make it as easy to understand as possible. And basically, we'll just talk about what is the child tax credit. And in relation to that, there is the child independent care credit as well to be aware of. And then, of course, can you claim your dependent? How do you claim your child as dependent? Does using a very common tax form, which is foreign earned income exclusion, aka 2555, help or harm you in terms of refunds, right? Most of the time, if you're trying to get this refund, it will harm you, but there are situations where it can help you. And what does your child actually have to report, right? You're so concerned about filing your own tax return. Does your child have to file a US tax return? When do they have to file a US tax return? What do they have to even report? So that's what we'll cover, and hopefully I'll give you really good information to get you started on your way to filing your 2022 taxes. So child tax credits. The first thing to know is that the child tax credit is actually comprised of 2 different layers. So the first layer is known as the child tax credit. This is normally a non-refundable tax credit. So this is a credit you can take on your tax return against any taxes owed. But if you don't have any taxes owed, you don't get anything from it. It's non-refundable. It's only to use to offset US taxes. However, there's a second layer. It's usually a smaller piece of it, right? Hence the little chart I have on the slides, but it's called the additional, aka refundable child tax credit. So of this child tax credit, the whole portion is normally first used as a non-refundable credit, but in the event that you don't owe taxes or that you don't need that full non-refundable credit, a smaller portion is actually refundable. It's a little bit confusing because they switched the names up. Basically, in every year except for last year, it's been called the additional child tax credit. And then in 2021, it was called the refundable child tax credit. And what do you know? In 2022, it's been switched back to the additional child tax credit. So all means the same exact thing. Don't be too concerned about the naming convention. The IRS likes to do that. Change names, change them back, keeps us on our toes. So how much are the credits? In 2018 to 2020, things were really standard, right? It was always, if you had a qualifying dependent under the age of 17, the non-refundable first layer was $2,000. So you had a $2,000 non-refundable credit to use to offset US taxes. If you didn't need to use this full credit, up to $1,400 was refundable. Now 2021 really switched things up. So not only was the age limit increased so that your qualifying dependent could be under the age of 18, The non-refundable layer for everyone was anywhere between $3,000 to $3,600. So significantly increased. This was the non-refundable part. Now the refundable layer for the majority of expats was still only $1,400. However, if you had lived in the US for more than 6 months in 2021, you could have gotten the full non-refundable amount as a refundable amount. I know, confusing, bear with me, but that was just for 2021. Back to 2022, it's come back to the normal standard with a twist. So again, it's for dependents under the age of 17. The non-refundable portion is still $2,000. However, you can refund up to $1,500 for everyone. No matter if you mainly lived in the US, if you were an expat the whole year, it's $1,500 as the refundable portion for everyone. So great news for those parents abroad that you can expect a little bit more as a refund on your tax return in 2022. So, it sounds all great, but obviously with everything that comes from the IRS, there's a catch. You have to be eligible, and there's a couple things you have to watch out for. So the first one is you do have to have a minimum income requirement. So you need to have more than $2,500 of earned income. Earned income in this case is any type of worldwide wages and US self-employment income and any foreign self-employment income that's not exempt from self-employment tax. That is a mouthful, and that's something to watch out for. So basically, if you are self-employed abroad and you decide to use a totalization treaty, because why wouldn't you, to make sure that you're not subject to Social Security tax in the US, self-employment tax, then you cannot use any of that self-employment income that you exempt from the Social Security taxes as earned income. So that is kind of a downer for a lot of expat families that are mainly self-employed. But again, if you have wages, you can always use your wages, even if that's not subject to any type of US Social Security tax. I will say most people will opt to use a totalization treaty to exempt their self-employment income if they can from self-employment tax, just because self-employment tax is usually higher than any refund you would get from the additional child tax credit. So again, bear in mind, if this is your situation, this might be something to consider when you're filing and a reason why you might not be eligible for the additional child tax credit. Now, the next part is the maximum income threshold. So I just talked about the minimum. Now there's a maximum too. If you are married filing jointly, you cannot have more than $400,000 in adjusted gross income. If you're any other filing status, you can't have more than $200K of adjusted gross income. Obviously, these are quite high thresholds, so most expats will apply. And generally, the way you calculate the additional child tax credit, so the refundable portion, is going to be whatever your earned income is, minus $2,500, hence this minimum threshold, times 15%. So that up to $1,500 is actually going to be what you can get refundable for tax year 2022. So now you know about how much income you need and also basically how much income you cannot have in order to claim this refund. What about your dependents? What requirements do your dependents have to be claimed as, qualifying dependents? So the first requirement is they have to live with you for more than half the year. Keep in mind, if your child was away for a temporary reason, vacation, schooling, so maybe they go to, a school that is further away, something like that, that's still counted as living with you, as long as they're temporary reasons. And your child must have not paid for more than half of their own financial support. So basically, they need to live with you, and you should be paying for their financial support. Then they're actually counted as your dependent, as they depend on you. The next big important one, because I think the first two requirements, that's pretty easy to pass for your children. I mean, kudos to you if your child's already off on their own super fast before the age of 17 or 18. But anyways, the other part is sometimes a little bit harder. It's, does your child have a valid US Social Security number by the due date of your tax return? So a lot of parents will go ahead and right away get a US passport for their children when their children are born, because, you should technically enter the US with a US passport. What a lot of parents don't do at the same time if their children are born abroad is get a US Social Security number. A lot of parents' reasoning for this is that they don't want their children to have to file US taxes. Spoiler alert, the minute you give them US citizenship, they're on the hook to file US taxes, even if they don't have a US Social Security number. So you are not doing them any favors by not getting that US Social Security number for them early on, keeping in mind that the older the child gets, the harder it might get. I'm not 100% sure on the age limit, but I think that once a child turns 11 or shortly after 11, they actually have to go for an in-person interview to get a Social Security number. So again, do your child a favor and get that Social Security number early on, because then you can do everything via mail and it's just a lot easier. And if they have US citizenship, they have to file US tax return and they have to have a US Social Security number. So if you don't get it for them, they will have quite the headache later on to try to get it themselves. So get them a Social Security number because it helps you in terms of refunds. It'll help them later on when they have to, file their own US taxes, they want to work in the US, things like that. But regardless, they need to have a valid Social Security number by the due date of the return. So normally the tax for each tax year, the due date is June 15th of the following year. But you can extend the due date all the way to December 15th. You just have to be aware of how to extend the due date, right? And basically, it's always due on June 15th if you're an expat. By June 15th, you can file an extension form, 4868, to get an extension to October 15th of that year. And by October 15th, you can file a formal letter with the IRS asking for a December 15th extension. If you are using MyExpatTaxes, we will keep you informed along with all the deadlines, when to file extensions, we'll help you file extensions. So don't worry too much about that one. The main thing to keep in mind is that you need to be on top of it because that Social Security number needs to come before that deadline. So it takes at least 3 months to get a Social Security number. I mean, of course, it can be faster if you're lucky, but I think at this point, especially with all of the issues that stem from the pandemic, it's probably more 3 to 6 months, depending on what country you're in. It can even be longer. So definitely plan in advance to get a Social Security number. Keep in mind, this is a process you have to do with, the US consulate in your local country, and they will have all the instructions for you on how to do that. We'll give you a short overview on the next slide, but it's really separate from your tax return. So as I mentioned, Social Security numbers don't trigger US tax filing requirements, it's the citizenship that does. And then, of course, the last question is your child under the age threshold? So basically, there's 2 thresholds to be aware of. One is a dependent. The dependent age threshold is up to 24 if they're a full-time student. But for the additional child tax credit, it's only up to 17 for every year except for 2021. And in 2021, it was increased temporarily to 18. That means they have to be under the age of 17 by December 31st of that year. So if you're filing a 2022 tax return, they have to be under 17 on December 31st, 2022. How do you get a Social Security number for your dependent? Again, this is very separate from your tax return. This is something you normally do in the same process as when you report their birth abroad, when you get their passport. So again, it's kind of a 4-step process. You have to first report the birth abroad. So you usually have to go to the US consulate. You have to get a consular report of birth abroad. At that same time, when you have it, you normally also request a US passport. So, again, make sure that you follow the process correctly. Every embassy and consulate will have instructions on how to do this. Some want in-person appointments, some want it mailed. It just depends on the current policy based on whatever their pandemic rules are. And then the next part is they'll give you a giant list of certified documents to have. You should make sure you have that ready to go. And then what will happen is basically the consulate will help you get the US passport. At the same time, they should also either help you forward your documents and the passport or a copy of it to the federal benefits unit, or they'll tell you how to do that yourself after the fact, and the federal benefits unit will be the one that will help issue the Social Security number. So it is a lengthy process because, again, first you need the birth certificate, then you get the passport. Once you get the passport, then you can get the Social Security number, and they are all coming from different departments. Plan accordingly. It can take a little bit of time. So that was the child tax credits. Now we'll talk about the child independent care credit. So basically what this is you pay for childcare expenses because you're working, right? That's not all lost. So what you can do is you can, basically deduct these expenses on your tax return. So what I'm showing you here is mainly for 2021 because that was the big year that, this childcare independent credit came into play and was really important. Just keep in mind for tax years prior to 2021 and the 2022 tax year, the amounts have been lowered to more of the normal thresholds, which is $3,000 per child, right? But in 2021, especially if you didn't file that return yet, is that you could have deducted up to $8,000 or a maximum of $16,000 on childcare expenses. Parents do have to both be working full-time for our students. And basically the types of expenses you could have are anything that is seen as a qualified childcare expense. It does not include, your own time, so to say. You have to pay for someone else to watch your children or care for your children, etc. Just keep in mind as well, if you're married filing separately, which is a very common filing status for those married to non-US citizens, you cannot use or you can't claim this credit at all. So like I said, this slide is mostly for the tax year 2021, because in 2021, if you had lived a majority of the year in the US, you could have actually gotten a refund from this credit. If you didn't live a majority in the US, it's like every other year. It's a non-refundable credit, and honestly, it's rarely used for most expats, which is why we don't dive into it too much. As you know, when you're filing a US expat tax return, first, you'll probably get a benefit from either the foreign earned income exclusion or the foreign tax credit. Then if you have some taxes left over, you'll probably use your child tax credits instead first. So the child and dependent care credit is not really that common of a deduction that we see. You can definitely claim it, but it's mostly non-refundable. But something to keep in the back of your mind, that if you do have childcare expenses, please, document them accordingly. It doesn't have to be for, US daycares. You can use childcare expenses for foreign daycares, things like that, and you can still deduct it on your tax return. It's just most of the time non-refundable, except for in the event of 2021, where it was refundable for those living a majority of the year in the US. So with that being said, more stuff just for 2021 because it was such a different year in terms of child tax credits. So this is really if you haven't filed your 2021 tax return yet, or maybe you have filed it and this will trigger you that perhaps you missed something. If in 2021 you did have a main home in the US for more than half of the year, which means that it's, kind of the main place that you lived, even if you had vacations or you were temporarily abroad, just keep in mind, for a lot of expats, if you were abroad for a short-term work contract, even if it was more than 6 months, technically your main home is still in the US. If you intended to return there and you were just temporarily abroad, you technically still have a main home in the US. Regardless, there's also some other exceptions for those US military personnel that's stationed abroad. But if you were a majority of the year in the US in 2021, you could have got a lot of money as a refund for the child tax credits. Otherwise, for every other expat, right, it's $1,400 in 2021. And again, as we enter this 2022 tax year, everything goes back to normal. The refundable amount is for the same for every single person, no matter if you lived a majority in the US or you were mainly an expat. But the difference is that amount is increased to $1,500 for anyone that's eligible. Another thing for 2021 to be aware of, just in the event you haven't filed that return yet, is this caught a lot of people off guard, is actually the IRS had issued advanced child tax credit payments to, taxpayers that they knew were eligible, me being one of them, right? Where they actually issued you half of what they thought you could get as a refund. But the thing is as an expat, you were only eligible for $1,400, and the refunds could have been issued on the premises that you were living in the US. So you could have gotten a lot more. For example, I got $1,800, but I was only eligible for $1,400 as an expat. And so I actually owed back $400 on my 2021 tax return. So this is just something to be aware of. If you haven't filed your tax return yet for 2021 and you know that you got these advance payments, it's very likely you might owe back taxes just because of the advanced child tax payments. It's kind of hard, right, to have to deal with this, but keep in mind you did get the money in advance. Even if you pay back taxes, it's not that you lost money, you still got money. But of course, it's a lot more fun to just get the refund, not get the refund, than pay back some of the refund. But just something to note, if you got this letter in the mail, make sure you file your 2021 tax return, because if you owe taxes, you need to file that ASAP to ensure that you don't have more interest and penalties. So let's move away from all the 2021 nonsense. Assuming that year's all done and filed for, let's look at what tax forms are you filing. So if you're listening to me and you're going, I have children that have social security numbers, they're under the qualifying age, but I've never gotten a refund. What are you talking about, right? Then it's probably because of Form 2555. So look in your tax return package. If you see Form 2555, this is an automatic indication of you not being able to get that refund. So the foreign earned income exclusion is a great tax benefit for a lot of expats because you can exclude up to $112,000 US from a foreign earned income exclusion from US taxation. However, then the con is you're not eligible for additional child tax credit. So this is actually a reason why we really try to optimize your tax return. We look at how much income you have, what dependents you have, what you're eligible for, and we determine if it's good to use 2555 or if we use another tax benefit like the foreign tax credit. So as mentioned, sometimes foreign earned income exclusion is not necessarily the best thing to have in your tax return. So while it does result in a lower adjusted gross income, AIG, which can help high earners. So again, this is something to balance, and this is why in the beginning intro I said, does foreign earned income exclusion help or harm your tax return? Is one benefit is, say that, you're filing, you haven't been filing and you're getting caught up, so you're filing for 2020, 2021, and 2022, something like that. And you haven't gotten your stimulus payments yet. If you were a high earner, so you're making over $75,000 US as a single filer, you might want to use the foreign earned income exclusion because you can get the stimulus payments for you and your children for 2020 and 2021, and then it would make sense to then probably revoke it in 2022 where there are no stimulus payments to then switch and be able to get the additional child tax credit. That is definitely a strategy a lot of people use. The thing is then you have to also then look, okay, or was it more beneficial that, I already got the stimulus payments, I don't need to claim them on my tax return. Then you might just want to stick with 1116 and not even deal with having to file 2555 or revoke it. I gather that what I'm saying is probably pretty confusing. The main message from here is your US tax return involves a lot of strategy. It's not just filing paperwork, especially when you're trying to get your maximum refund. There's a lot of optimization that's required, and that is a great benefit to using MyExpatTaxes. Depending on how many years you have to file for, you enter in all your income in the local currency, we convert it to USD, we see what refunds you're eligible for, and based on how many years you're filing, we'll actually look, okay, it makes sense to use this benefit in this year, this benefit in this year, and then in this year we might switch to a different benefit, or it doesn't make sense at all, we stick with this benefit through the whole entire time period. And especially if you then use kind of our more professional premium tiers, you really have someone looking over your tax return and making sure that you get every single dollar you deserve from it. So that is something we also see a lot of people coming to MyExpatTaxes to amend their prior year tax returns. I mean, at the end of the day, like I said, when something involves so much strategy and optimization, if you hire, a regular tax accountant to do your taxes and they're doing hundreds of tax returns in that year, they might not have the time to optimize it. And that's the great thing about a US tax software that is meant for your specific case, is that the optimization happens instantly, right, via our tax engine. So that is a benefit to use MyExpatTaxes. Otherwise, I do pretty much suggest that you look at your tax returns if you haven't been getting the additional child tax credit and you believe you're eligible for it, and you think about whether your usage of 2555 is correct, and maybe vice versa. You haven't been using 2555, but you're a high earner and you didn't get the stimulus payments in 2020 and 2021. It's not too late to amend your tax return to then include 2555. Oh, that's a mouthful to say. Anyways, but long story short, lots of optimization required when it comes to refunds. So the next part, when we walk away from refunds and the kind of nice part about filing US taxes for US expat families, is the not so nice part is, what do your children have to do? It's already quite time consuming to file your own tax return. Do your children also have to file their own tax return? Do they have to report their assets? So the first part is the kind of more the reporting of the assets. Normally children don't have to file a US tax return until they go over the filing threshold, which is your standard deduction every year, except for those married filing separately. But again, if your child is married, they're not a child anymore for the most part. But tax returns are pretty easy because they normally don't need to file unless they make money. But a harder one is if they have to file an FBAR report, right? So if you open bank accounts in their name, if you open investment accounts in their name, right? Even if you own it and you just put their name on it, in the event that the combined maximum balance of all of their foreign financial accounts that their name is on is over $10,000, just like in your own situation, they have to file their own FBAR. You cannot just include their accounts on your FBAR. They have to file their own FBAR, even if that information is exactly the same. So just keep that in mind. If you have accounts for your children, you have to make sure that you have to include them on your own FBAR if you have signature authority. Then you have to ensure that if your child is over the filing threshold for FBARs, that they've also found their own FBAR as well. The other part is, again, like I said, normally they don't need to file, a tax return unless they're over the filing threshold, assuming pretty much all children are single. It would be $12,950 as the filing threshold for children. So as long as they don't make that much, they normally don't need to file a tax return unless they have unearned income. So if they have unearned income of over $1,100, you'll have to think a little bit more carefully. You either need to include their unearned income being any income that they don't actively work for, right? So interest income, dividend income, pension income, things like that. If they have over $1,100, you either have to include that income on your own tax return via Form 8814, or they might have to file their own tax return if they have a lot of unearned income. So keep all those things in mind. Normally, children don't have to report anything. However, there are situations if you especially open investment accounts for them or bank accounts with them earning interest, they may be subject to reporting this information as well. Obviously, if you're thinking, oh man, they need to file FBARs and I never filed for them, there is a delinquent FBAR submission process. So don't worry too much. There's always a solution to ensure that everyone is caught up and compliant. So as mentioned, to make sure that you are in time with your tax returns, especially if you're trying to get your children on them with a valid US Social Security number, again, be mindful of the filing deadlines. So everyone has up to June 15 as long as you're an expat to file. Obviously, if you owe taxes, file and pay before, because your payment deadline is always the April 15th deadline. This year, April 15th falls on a weekend/holiday situation like it did last year, so it's April 18th. And if you cannot get your children a US Social Security number by June 15th, make sure you file an extension, which you can do for free via MyExpatTaxes, to October. And then, as I mentioned before, by the October deadline, if you still don't see it coming, you can also request an extension to December 15th, and we provide all those details as the time comes closer. If you have not been filing, right, and you're coming here saying, I'm not even tax compliant, I don't know where to start, I would advise you to go through the Streamlining Filing Compliance Procedure. So what that is even if you haven't filed for 10 years, 20 years, 30 years, you only have to file 3 back years of returns. So for this year, it would be 2019 to 2021, and you would file your current year tax return as 2022, and then 6 back years of FBARs. So it's 2016 to 2021 of back year FBARs and 2022 as a current year. And you are still eligible for all these refunds. So anything in scope of 2019 to 2021, you can still get the refund for, whether it's the additional child tax credits or the stimulus payments. So don't leave that money on the table. Do keep in mind that the timeline to get the 2019 refunds is coming up. So you only have 3 years to claim a refund. So if your 2019 tax return was due, assuming you didn't get an extension because you didn't file it, right? But it was probably due June 15th, 2020. So you only have until June 15th, 2023 to claim that refund, meaning you get your return to the IRS by that date. And they are very strict about not honoring refunds after the 3-year threshold has passed. So keep that in mind. But the other ones, you don't have to rush so much. Just 2019 is kind of the one that's on the table now. Regardless, so many people come in freaked out that they haven't been filing taxes, and then they go through the streamlining filing compliance procedure on our website at MyExpatTaxes.com. They get caught up in a day, sometimes even less if they have all their information readily available. A tax professional reviews their return, and they come out with thousands and thousands of dollars in refunds. I mean, we see people that have, 3 or 4 children. You're really talking about tens of thousands of dollars in refunds that have potentially been left on the table that have been claimed back. And again, the nice thing is you get interest on top of anything the IRS owes you, even if it was your fault for not claiming it. Like you would have to pay the IRS interest. If you paid late, they pay you interest if they pay late. So that is something pretty cool. If you do go through streamlining, do expect some delays in processing, which is why you want to get started faster than later. And it's pretty much that you have to paper mail streamlined returns. So, it can take a year to get processed, but you can always e-file your current year return. Keeping in mind, a lot of US-based tax softwares don't allow expats to e-file, but MyExpatTaxes will always look to e-file your tax return, and 99% of our expats, honestly more, can e-file only in very special cases like streamlining, or they have some very specific form, can they not e-file. But we work directly with the IRS to allow expats to e-file, even if all other US-based tax softwares leave us out, right? Streamlining can be a bit pricey because obviously you're doing 4 years at once. We try to make it as affordable as possible compared to what most firms would charge, and we try to make it as fast as possible as well for you and as painless as possible, right? Because that's the important part. So definitely, if you haven't been compliant, look at streamlining as a great option to get all the refunds you've been leaving on the table back into your bank account. So I've given you so much information. If you're confused, if you need more help, feel free to reach out to our team, right? team@myexpattaxes.com. You saw on the first slide, we have a Facebook group as well that really is great resource for you that you can join. There's a lot of expats in there that are in your situation. If you have questions, a lot of times those questions are forwarded directly to me or my tax team, and we'll answer them for you. And as you're sitting there, if you're thinking, hey, I need a tax partner to help me through this, I don't think I can do it myself, check us out. There is something for everyone at MyExpatTaxes, whether you want to do it yourself, whether you want to do most of it yourself and just have someone look over your input and make sure everything looks okay, or you want to have a video call with a tax professional and really walk through it hand in hand, so to say. I mean, virtually, of course. But you can file with MyExpatTaxes, whether you're simple, whether you're complex, whether you don't have that much income, whether you have foreign corporations, foreign trusts, foreign mutual funds. There's something for everyone at MyExpatTaxes if you have to file US taxes from abroad. Thank you so much for your time today, and I hope you learned a lot of good information. So now that we come to the end of this webinar, we'll jump into the live Q&A. Of course, if there's a lot of questions, we can't guarantee that we can answer everything. So if you want more, if your question wasn't addressed, if you have more questions after the fact, make sure you join our Facebook group. There's so many expats in there that are in your situation. And if there are questions in there that, are a little bit more complex or aren't answered, they're usually forwarded directly to me or my tax team, and we'll answer it for you. Even if you don't see my name on it, it's definitely a team member from the MyExpatTaxes community. And it's the best way to reach us kind of more informally with your tax questions. Or of course, you can always email us at team@myexpattaxes.com if the question is a little bit more personalized. Otherwise, we look forward to your questions coming up.